Okay, so I think we have a lot of discussions about the macro and fiscal landscape in Romania, and for sure a lot of you have questions about how it's gonna look 2024 and what's best to know from a macro perspective. So I would ask the NBR opinion, let's say, about how does 2023 look until now, and what were the main challenges you've encountered in this year, and from a macro and fiscal perspective, of course.
First of all, thank you very much for the invitation. I'm really happy to be here and to see you. I was surprised how rapidly the city Brașov is developing. It was good to see so many new buildings, and everything looks nice. So Romania is making progress, at least some parts of Romania. Generally speaking, about the outlook, I would say that this year we will see well below long-term average growth pace. So usually in the case of the National Bank of Romania, we do not publish GDP growth figures. We are focusing more on inflation. But if we take the long-term average at around 3.5, or anyway in the range of from 3 to 4, so this year's growth pace could be somewhere halfway between 0 and this long-term average, or roughly 2%. And it seems that the next year, 2024, will bring another quite difficult and year with a similarly soft growth pace. But it is important to note that this scenario, 2 years with relatively subdued or soft growth paces, are not the worst scenario. Instead, I would say that this scenario could be one of the best among the possible or reasonable scenarios available for us. What has happened? Looking back, 2021, GDP growth pace was very strong, almost 6%. Last year, GDP grew by almost 5%, so we had 2 excellent years. And this year we have data for the first half, and it is clear that we can see a broad-based and significant deceleration. So on average, in the first half of this year, GDP grew by 1.7%. And when we look at the first quarter, it was the annual GDP growth pace was at 2.4, and in the second quarter, it dropped to only 1%. So clearly, there is a significant acceleration. And behind this evolution, we can identify several key factors. And the first, I would say, is external. The global economy slowed significantly in the past few quarters. GDP growth in the Eurozone is very low. This year could be around 0.5. And of course, with a much weaker external demand, export growth slowed down significantly in Romania. This is one factor. The other is related to domestic demand, and more specifically to consumption growth. Households in the past 2 years were quite in a relatively good shape. Demand was quite strong, but in the first half of this year, many things has changed. Households become much more prudent, much more cautious. And this change led to much softer figures in the case of consumption. And of course, this kind of prudence is not something favorable for entrepreneurs, but I would say that some sort of softening was necessary, because we have to solve the inflation problem, and we also have some quite large twin deficits. The government budget deficit is high. The current account deficit is particularly high. Regarding turning back to the outlook. Sorry, I forgot to mention the key driver. Okay. A strong evolution can be seen in the case of investment. So this was the segment which helped Romania's economy to remain in positive territory. And if we dig deeper, it is quite clear that EU funds played a very important role in this evolution. When we look at the construction sector, we can see some softening in the case of the residential segment, but civil engineering segment, it practically covers infrastructure investments, performed very well. So EU fund absorption was a key driver, a very important factor which helped us. And 1% GDP growth in the second quarter of this year may seem like a crisis. Clearly, it is not a strong figure, but I would like to remind you that there are several countries from our region, such as Poland, Hungary particularly, but also Czechia. In their cases, GDP growth is in negative territory. Short-term perspectives, we don't have data for the third quarter of this year. GDP data, but we have several alternative indicators, high frequency indicators, and we see that the underlying momentum of the economy is softening, is weakening. But in the third quarter and to some extent the last quarter of this year, we could see some kind of a boost from agriculture. Agriculture in the third quarter has a very large share. Regarding the perspectives for next year, if you want to make a good prediction, a good forecast for next year, or in general, it is important to start with the external context. And in the case of the Eurozone, our main trading partner, it is expected a mild reacceleration for next year. So this year, growth pace around 0.5. Next year, Eurozone may grow by around 1%, maybe a bit less. And this could help to some extent exports and to some extent industry as well. The second segment, consumption, household consumption, we see now that households are much more prudent, much more cautious. But when we look at the data, how wages are evolving and how inflation is evolving, it is important to know that now wages in real terms are again in positive territory. And we have a quite tight labor market, and this could fuel wage growth next year as well. There are planned minimum wage hikes, public wage hikes. Again, these factors could support wages. while inflation is expected to soften further. So in real terms, wages will go up, but households may be still relatively prudent, so do not expect a sharp revival of consumption. And in the last segment, investments, I think it's quite clear that we need EU funds. This could help Romania's economy. This could help investments to remain in positive territory.
Okay, thanks a lot for these insights. I would also try to find more about the external factors, because in the last crisis, 2008-2009, the fact that Germany and the Eurozone were in recessions, it was a very bad omen for Romania, and it was, the joke that when Germany sneezes, we caught the flu. I don't know if we should be so worried for this year and for the next one, because Germany is also on the verge of recession. We are maybe better protected now. We have other drivers to replace what the demand from Germany and other Eurozone countries are providing to our GDP.
Of course, as I said earlier, what is happening outside is extremely important. So usually we like to discuss what is happening on the political front, what is happening. There is always some crisis, some scandal, some headlines. But of course, what is happening outside is extremely important. So Romania's economy is relatively well integrated into global value chains, and particularly in the value chains of the Eurozone, Germany. And if we see there that something is not going very well, it will have negative impacts on Romania's economy. But I also said earlier what is important, that the labor market is relatively tight. So when we unemployment is at around 5.5%, that's a pretty low level. Wages are increasing by 15%. So indeed, households or the consumers in general become much more prudent, much more cautious, but they are not dead. So with a mild deceleration, as I said, GDP growth could be around 2% this year and next year. I think it's not the worst case. We could, if we would have a much stronger growth pace, that could have negative spillover effects on inflation. So a very strong demand, very strong GDP growth could re-trigger inflation pressures. And as Romania has a very high current account deficit, in this context, you do not want a very strong domestic economy. Of course, if the economy would be much weaker, if we would have an outright deep recession again, that could bring a lot of pain for households and companies. So I would say this relatively soft growth paces for this year and next year is the best among, or one of the best among the reasonable scenarios for the following period.
Okay. I would ask you now to maybe to elaborate on the twin deficit, because we've seen this kind of disease before, and it's constant in Romania, I guess, to have twin deficits. Can you elaborate on the risk these deficits pose to the economy? And
Of course. So Romania's current account deficit reached 9%, 9.1% last year. This is a very large figure. But going back to 2006, 2007, we had an even higher current account deficit. What does it mean? A current account, if you have a deficit, it means that you import more than, so imports exceeds exports, and you need financing for this level of imports. And in an environment which is characterized by much higher interest rates, not only in Romania, but everywhere, in the USA, the policy rate reached 5.5%. So it's not much lower than in Romania. We have, our policy rate is staying at 7%. In the Eurozone, again, short-term interest rates around 4.5%. So it is getting more difficult to finance such large deficits. And in 2008, what has happened? Suddenly, these financing sources disappeared. And if you have a very large financing gap, that could be extremely painful. So I would say don't wait for external shock. Start the homework today. And let's make these deficits lower. We do not need a zero level, or we do not want a current account balance which is in positive territory. We need to import more. We need to import for investments, but not for consumption. And this year, I think that the current account deficit may be lower, around 7%, so a 2 percentage points adjustment. And we need probably 3 more percentage points. So a current account deficit around 4% may be already sustainable over the medium and long term, because we have EU funds. On average, EU funds represent around 1.5, maybe 2% of GDP, and it is, we call it a stable source. Yep. And we also have FDI, quite significant inflows, around 2% of GDP. So 4% current account deficit, broadly speaking, can be sustained, can be financed from EU funds and FDI, but we are at 7%. And in the case of the budget deficit, last year, using ESA standards, the EU standards, the government budget deficit was slightly exceeded 6%. In 2020, it was 9%, but that was a really special year. And there is also a connection between the government budget deficit and the current account deficit. We can also look at the financing side of the current account deficit, and we can look at what is happening in case of households, in the non-financial corporations, and the public sector, and it is very clear that the large share of the high current account deficit is the result of the public sector. So yeah, we have to work. These are the main challenges for Romania on the domestic factor, and of course, as you can see outside, there are many more challenges as well.
You've mentioned the FDI, the foreign direct investments, and most of the cases they are pretty much correlated with the fiscal environment and with the tax rates here in Romania. So in of course, in the last 6 months, we've seen a lot of turmoil in the fiscal, at least announcements. How do you see this kind of risk from the fiscal space, from what the government would try to impose more taxes, and what will be the impact on FDIs, on private consumption?
Of course, no. I would start with the fact that we really need consolidation. The government budget deficit has to shrink. We need a much smaller deficit. We cannot imagine a growing economy with very high deficit, with very high macroeconomic imbalances. From this point of view, I would say that I welcome that there is something. They try to reduce the government budget deficit. There is a package. Next year, the deficit could be lower. But of course, the form how it is made is a different story. Ideally, in a perfect world, I would say the first step would be to make expenditures as efficient as possible. So use expenditures effectively, reduce costs. The second would be collect revenues. We know that in the case of Romania, revenue collection is at a very low level. And the third, the last step would be raising taxes. But let's say it is a step in a good direction, in the sense that we need a smaller deficit. And I think that we can buy some time. We can maybe convince EU representatives to allow us to send us, to help us with EU funds, and that's a key question, that we really need EU funds. Of course, in the case of growth, this should have a negative impact. But let's say the government budget deficit could be 1.5 percentage points lower. So it's a significant impact, but not something huge. Of course, in case of certain sectors, the impact is much more significant. In case of inflation, in the short term, it's quite clear there are some increases in indirect taxes, so it's unavoidable to see some impact in the case of inflation. There are also some additional costs for companies. Companies may transfer partially these costs. So yeah, in the short term, there are some inflationary risks. But on the other hand, these measures will have an impact on demand. Demand will be lower. So the net impact, I think, is less than 1 percentage point, maybe closer to half a percentage point. And that's very important, that on the long term, we cannot imagine healthy growth pace and relatively stable and low inflation without consolidation in the government budget.
Okay.
I can respond the call.
No. It's not. It's just a timer about announcing us that we'll almost finish the 20-minute sessions, 25-minute sessions, but I have still one more question. So I would try to get some insights about the lending potential, because we've seen this slowing economic growth and increased taxes. So I suppose that will be also an impact on the lending growth. The people are more wary, you said, and the households are spending less. So I believe that there should, or it might be also an impact on the lending growth of the banks from the Romanian system.
With economic growth, relatively soft figure this year and next year, and relatively high interest rates, so clearly in case of lending, this year and next year will be not something we cannot expect very high growth figures in case of lending. When we look at certain sectors, we can see that the most interest rate sensitive segment, the mortgage segment, slowed the most. So in the case of mortgages, we can see that actually the volume of credits are stable. In the case of consumption loans, there are a modest, a very small increase, and in case of non-financial corporations, there is a significant acceleration, but I would say that it is coming from a very high level. So last year we saw a few months with growth pace near 25%. So yes, it is. There is a significant acceleration. I really hope that next year we could see that these trends lending is bottoming out.
Okay, and thank you. And just to wrap it up, what's the base scenario of NBR in terms of GDP growth for 2024?
We will have a new report in the beginning of November, and as I said, we do not publish very precise figures about GDP growth. We are more interested about the GDP gap. GDP gap measures the difference between demand and supply. But to tell you a figure, I would say that something close to 2% this year and next year as well. But there are also really high uncertainties, and we have to acknowledge these uncertainties. Some of them are coming from outside. You can see there is a war in Ukraine, now in Israel. Interest rates increase quite a lot in the USA, in the Eurozone. So it is a quite complex background. And on the domestic front, as we discussed already, the new fiscal package will have also some effects. But generally speaking, the growth could be close to 2% this year and next. And the balance of risks is tilted to the downside.
Got it. Thanks a lot. We have time for one, maybe two questions from the audience. So if you have questions, that's now the best time to ask. Okay, there is one question.
Yes. Thank you for this interesting keynote, Csaba. A question to you regarding oil, and how do you see that having an impact on local inflation? Because obviously you mentioned the war in Israel and Ukraine, and we're seeing that oil futures are popping again, so moving towards the $100 level. Do you foresee a significant impact on the local inflation? Thank you.
Yeah, of course. So oil prices is a risk and is a concern. Some of the pass-through between crude oil prices and consumer prices is very strong and rapid. So we already, when we look at the latest inflation figures, we already saw we can see some impact. And of course, if there is a war, usually war in that region of the world used to generate risks. Of course, we follow it, we monitor it, and I think that these pressures may enhance the narrative of high for longer story, which are said frequently by policymakers, by central banks.
Okay, one more question from Codruț.
Hello, thank you for the presentation. You talked a lot about GDP, but recently National Bank of Romania initiated a lot of actions on becoming, let's say, making more awareness in the banking system about the wealth economy framework, including a recent book that it was published by National Bank of Romania. So do you have any concrete actions in the following period of time where to emphasize more about the other class assets, natural capital, social capital, human capital, especially in the dialogue between the National Bank of Romania and the financial banking system in Romania? Thank you.
No, I don't have very detailed information. For me, for my case, the inflation is the, I didn't speak too much about inflation, but this is still the, that causes the most, the headaches. Generally, we can see that there are many changes. So the following, maybe the following decade will be characterized by the digital and green transition, and we also try to focus on this era. I think another challenge for the central bank, which is not related to the inflation, is financial education. So in the case of Romania, we really need to make efforts to increase the level of education. So I cannot give you a very detailed plan, but I could come back with more info in email if you wish.
Okay, thanks a lot for the question. Thanks, Csaba, for being here. So it was a pleasure. Thank you very much for the information and for the outlook of how the Romanian economy will look like in 2024.
Thank you very much.